There are times when this is going to fail. Yeah, I was thinking about talking about that as well, because I think one person in the comments on ICT's video actually said that, sometimes when he sees this and he's trying to trade market structure, it always reverses on him. There is a third bit that ICT said in that video that just people just don't pay attention. Here is what ICT says. And this this particular advice or information from him, that's what allowed me to learn how to trade reversals. Like, if your main analysis fails, how to switch your analysis real quick and take the reversal trade. Just let's hear from ICT himself.
These ideas I'm going to teach you in this lecture here will help you identify the likelihood that your idea has probably been proven inaccurate, but you have to be receptive to the clues that price is giving you.
At least four different keywords in just the 14-second video. Like, bro, if you don't pay attention, you're going to be lost. Let's play that again, and I'm going to put the caption on.
The likelihood that your idea has probably been proven inaccurate, but you have to be receptive to the clues that price is giving you.
Four keywords: likelihood, probable, inaccurate, and receptive. Four keyword, and here's why. Let's say you have identified your ICT signature. Let's do a third drawing here. You've identified your ICT signature, all right, and you took your trade at the imbalance. Okay, it gave you an intermediate term high. The market gives you an intermediate term low, and then you get this shit. How can you, I'm not going to say avoid it because it's sometimes unavoidable, but when it happens, it doesn't necessarily mean that you're a bad analyst, as ICT himself just said in that video. You didn't, it's not necessarily that you're a bad analyst. Anything can happen. Some news, some company, some interest rates, some earnings shift the perspective of the market just like that. All right. Let's say you get stopped out. There are a couple of ways that you can use based on the information that the market gives you to not get stopped out. Or even if you get stopped out, how to act upon it. All right. The first way is this: from the first displacement, remember, long-term high, long-term low, first displacement, intermediate term high, intermediate term low, second displacement in this particular example. All right. On when I'm going to show other examples, you will get my point. Shit, I don't want to make this video too long. Hopefully I can cover this real quick. So in this particular example, I did not trade NASDAQ on this day. I was trading S&P, and I was already in the trade from this point, but I will show you later why. In this particular example, if I know we have the benefit of hindsight or whatnot, but that's not the point. Just get the context, right? We have this imbalance right here. Please follow my mouse. We have this imbalance right here. So it's fair for you to think, as per your analysis, as per everything ICT taught us so far, you have the displacement, you have the imbalance. It would be fair for you to wait for a trade here. Nothing wrong with that at all. It's the imbalance, all right? However, the way price delivers things, you always have to put yourself in a situation where you are not in a predicting mood, you are in a probability mood. So it's not because this is the imbalance that the market hasn't left another imbalance above it. Not only you have this imbalance, but you also have this order block. Why this order block? Because you have an imbalance up here. Not only you have this imbalance up here, but please check this out. You also have an imbalance up here. So now you have three different entries. How do you manage that? First of all, me personally, when I see this right here, this order block, I'm not targeting the imbalance. For what? I'm targeting the order block. just as per habits of what I've noticed in the market, this is what I would have targeted. But you know what? Fuck it. I'm not trying to teach you anything aside from what ICT teaches. He said imbalance, let's stick to the imbalance. We have an imbalance here. Even if I take the trade here, I've gotten to a point in my journey where I don't just take this trade and put all my hopes in there. Nah, this is just for paying. This is just, if I take this entry, I'm just paying for information because I noticed the order block and I noticed this imbalance. So probability number one is like, all right, best case scenario, we tap in this and we continue. Two, intermediate scenario, we tap in this and we continue. Three, worst case scenario, the market comes all the way up here and we continue. I swear, if I lose all three of them, I'm out. I'm only allowed for 5 trades in a day anyway. If I lose all of them, my fourth trade will be to literally look behind and look at points where the market may come back to take the reverse trade. That would be my 4 trades of the day. $25, $25, $25, $70. By the time I take the fourth trade to go in the other direction, like here, to go in the other direction, bro, I already got all of my money back. 25 times 3 by my partials, I already got my money back. So you always have to keep in mind, again, as per ICT words, even if I take my trade at the imbalance here, is there any reasons aside from this area that the market may not just react here and try to react to something left behind here? If you honestly don't see any other reasons, then bro, take your trade. Put your 1% risk that you want to put in here and you're cool. But if you spot a reason here, a reason here, and a reason here, bro, split that 1% in 3. That's 0.33% at this point, 0.33% at this point, and 0.33% at this point. You're just paying for information. The one that gets in, soon as you see the displacement, that's it. You think intermediate term high and you look for intermediate term low. And as long as the market doesn't break this, you can load your, not load, but you can, what is that term that ICT uses? There is a word, even EC, you know the term that I'm looking for. I don't do it. I think it's loading. You can load your trade down here as long as we don't break this intermediate term high. So again, it's just a sequence. But if the sequence fail, then the sequence failed. You either close your laptop and go to bed, or you're trying to take the reverse. I'm not really going to explain how to take the reverse here. I don't want to confuse this. Like, I'm trying to do this one thing at a time, but we're just going to stay here. But sometimes it could fail, all right? And if you don't understand the mechanism of the sequence, or at least ingrain this into your head, then it's going to be kind of hard. And please, I don't want you to look at this as a pattern. And I called it a sequence on purpose. Maybe it comes from the fact that as a designer, I deal with, design systems, and I've gotten into the habit of taking data and turning it into sequences and design paths. But it's a sequence because it will happen this way. If it's not happening this way, else if, then it failed. That's it. You know what I mean? So it is what it is as per ICT still. So if it fails on you, that just means you did not pay attention at, the clues that the market gave you as it was developing. For instance, if I see this first displacement, retest of the imbalance, instead of having a second displacement, the market starts to move like in a choppy way, I am likely going to exit the trade because I'm looking for a second displacement. I'm not looking for some choppy shit. All right, I'm looking for a second displacement. And again, keyword likely. But if the market doesn't give you an information or doesn't give you how the sequence is supposed to behave, fourth keyword from the last piece of video, from the last cut, for last video cut that I showed you, you have to be receptive for it. All right. Not trying to teach you psychology or anything here, but yeah, whatever. Fuck, I use the word teaching. Shit, I'm not trying to teach you. I'm just, I'm just trying to help. So that's that. All right, let's move on to different trades. Actually, let's see how this trades developed itself. How come it did not come back all the way here? Oh, so we had like a minor ICT thing here. In reality, if the market was to come back down here, this would have been the point of, of retest to go to the upside. But because we never tested this, and on the way down, the market failed again to test this, this became the most probable first point of retest, and this became the second point of retest. Okay, okay. I missed that. See? Even while even while making videos for you guys, I'm learning as I'm doing it. That's why I enjoy this. Anyway, so let's find some more examples, even here on Nasdaq. Now remember, again, first displacement, long-term high, long-term low. When you go back to the imbalance, that imbalance is supposed to give you a second displacement, and that second displacement would be your intermediate term high and your intermediate term low. All right. If it breaks the long term low straight away, it's going to give you an intermediate term high and a long term low straight away. All right. Remember this sequence right here. You can screenshot it if you want to. Let me just put it up here. If you want, you can screenshot this. It's really up to you at this point. This one is long term low, and so on this one you have a long term low and an intermediate term low, but on this one you don't have an intermediate term low. You just have a long term low straight away, and the market can either come back to test this or this. Okay, so first point of test, second point of test, just like the market just did here. All right, we came all the way down, we broke this, so now we have first point of test somewhere here, second point of test somewhere here, third point of test somewhere here. All right, that's how I look at it. That's how I look at it. So even if I took a trade here, I keep in mind that, well, I could get stopped out and the market is actually trying to test this point. These are reasons for the market to go even higher, if that makes sense. Plus you have some sort of orders being built right below this standard deviation, zero standard deviation. So this mean, that's what I mean. So yeah, whatever. Anyway, let's find other examples, and I'm going to find examples regardless of the bias at this point. I'm just going to go in a chart and just look for 15 on a 15 minute and just look for examples and show you both variation of the sequence. All right, and remember what a sequence means. It's a set of events that follow each other in a particular order. All right, so let's find an example. Do we have an ICT somewhere here? Indeed we do. All right, nah, I wouldn't trade this. I mean, it still hold. Actually, yeah, it still hold. There you go. So in this example, maybe we need to look at it on a 5 minute or something like that. But anyway, in this particular example, what do we have? Right here. Okay. Right there. This is our liquidity pool. We push down. What did we leave behind? Big ass order block. We came and tapped this. So now you have your long-term high, your long-term low. The market came back into this imbalance, gave you your intermediate term high, and dropped directly to give you a second long-term low. So now where do you expect a trade, a pullback to? Somewhere in this vicinity. You have your pullback and you continue to the downside. That's that. Maybe in the future I will explain to you how to measure it. There is a way for you to figure out actually where the market is going to go when your bias is right. When your bias is right, all you really have to do is look at the second displacement and you can literally plot from this point to this point and figure out where is your two standard deviation, and you take your profit. You just wait for the market to go to two standard deviation. That's it. But again, this is the This is the sequence. Now, as you can see, it's not picture perfect the example that ICT showed. I feel like somewhere this also might be the problem where people may expect to see this exact sequence, like for the market to deliver exactly like this. No, it won't.